Okay, hello guys, how's everybody doing? I hope each and everyone is cool. Let us now try to discuss some sort of pairs that were taken in the past few weeks. Actually, in the previous week, I didn't trade a lot because I had sort of personal issues, but now that everything is solved, I think we're going to go on as usual. So starting with the USDJ pair, as long as we're having the weekly, one of our constant time frames, the weekly time frame. Clearly, on the past 2 weeks, we had this area of liquidity right here. We had this area of liquidity, the weekly one. So in order for us to come to liquidate this area of liquidity from the weekly, we had to have a shift on the 4 hours time frame. So speaking of the 4 hours time frame, the market has a way of communicating with people. If you observe clearly here, as long as you know how to spot the shift clearly, from this point right here, there's no any clear shift that was happening at the moment. Later on, when we play the price, and let me play the price for a moment. As you can see here, we had a shift, and also we had this formation, but the market came and stops it out. So that was the first time that we have been stopped out by that particular shift, but no worries, just have to wait for a perfect one to happen. As you can see here, the market later on came again, performed another shift on this area, and also the market left us with this inside formation. If you observe clearly this inside formation, if we try to measure in terms of risk from this point to this area, as you can see, it's almost 4.5 pips. So when you observe something like this, you don't need to go to refine your entries, because you are finding a lot of accuracy, meaning that you're also decreasing some sort of precision. So chances of chances of the market coming to to trigger your entry is going to be very, very minimal. So it's better if you find the risk that actually appetite, it's better for you just to mark the area like this and your stop loss even 1 or 2 pip above, and wait for the market to come to tap your entry as usual. So if you play the price that the market came, taps into that entry, and now this has to go down to the weekly area of liquidity before we have to go up again. So the market came down almost how many pips? As you can see here, 421 pips. And also the market later on didn't perform any clear shift, but some of you would have taken the entry based on this area right here. So yeah, so that's how this pair is continuing to move. And the main purpose of the market coming to liquidate this weekly area of liquidity is that the market needs liquidity to create more highs. The markets need liquidity to create more highs. So we expect for the market now to come and perform a closure above these areas, or even when the market goes up to these areas to the what we call as the reclaim point, it's also okay. But clearly that was how this USDJPY pair was traded. Also, coming to the USDZAR, if you observe clearly, let's say on the monthly, we're having unclear price action on this area, but the dominant area of liquidity at the moment was this one. Some of you may ask why. Because if you observe clearly, we were having this as our validation point. Because, no, if you observe clearly here, we are having this as an area of liquidity. But also we had this area of liquidity right here, but the market later on came and tried to liquidate it. But as you can see here, we didn't create a new high after liquidating this area of liquidity. As you can see, that means this pair didn't maybe consume enough liquidity to this monthly area of liquidity so as it can go and create maybe a new high. That's why when I went to the daily now, I went to go and find some sort of bearish types of shift so that I can actually try to look at it. Maybe maybe the market may come down to liquidate these areas of liquidity below because it failed to create a new high after coming to consume this area of liquidity. So I went and find out that I was having this one right here as my area of liquidity after the market performs a shift. So we had this one, this was already consumed. We also took an entry based on the 4 hours time frame, if you remember. But also the market came to this particular area of liquidity right here. And when you come to the 1 hour time frame to observe, let me play the price so that you can actually see a complete shift rates before you take anything. So if you come now to the 1 hour time frame on H1, we didn't have a clear price action, as you can see. But coming to the 15 minutes time frame, on the 15 minutes time frame, we had some sort of confirmed liquidity flip, which was located on this area right here. And when we say a confirmed liquidity flip, is that when it was maybe a liquidity engineering, before coming to the liquidity flip, the market tried to test it, maybe tried to consume, tried to maybe grab it, some sort of like that, for the market to continue to go down. And from this case, we don't put our stop loss on this area because of specific reasons. But clearly, after putting that, I also told you on how to count these pips, maybe on these pairs like USDZAR and also USD Mexico. We usually divide these points by 20. So for me to maybe take this entry, I would have put my stop loss to 15 pips. That means dividing it by 20, it would have to be 300 points. That means my stop loss has to lie somewhere here. Clearly, maybe right there, it's not too bad. So you would have taken your entry on that liquidity flip, and by 15 pips, as usual, you are actually safe. So the market later on came. The market later on came, and this was the entry point. And also this was your stop loss, 15 pips. Yeah. So the entry was triggered, and the market now continues to go down. We didn't perform any shifts, maybe from a bullish perspective. So we anticipate this market to continue going down. We may trade maybe other agglomerations based on this, maybe these areas that the market continues to form when it continues to go down. But clearly, we don't have any clear price action telling us that we are going to buy this pair at the moment. So we are just waiting for the market to perform a shift on this area so that we can actually go out of these selling trades. But also you are recommended to take a lot of partials, because actually anything can happen at the moment because the market moves in an uncertain way. So it's better for you to take partials each and every time. Maybe you bank some sort of pips, some sort of profits. And also, we also took another entry based on the USDCHF. And this USDCHF entry, I remember it was from the 4 hours perspective, based on the 4-hour continuation of shift, which happened on this area. So it was also an HPS entry. That's why we took it without following the directional buyers rules, without following each and every criteria. But we have some sort of rules that we usually apply based on this HPS. But clearly, on the normal circumstances, this was the area of liquidity that was actually used. And coming to it, maybe on the 30, refining it, we had this liquidity engineering right here. That was my liquidity engineering. So later on, the market came. And from here, my risk was almost how many pips? The CHF pairs don't have enough volatility, so the risk is very, very tight. So if you're having a very good broker, you're going to take advantage of those 2.5 pips. Later on, the market came, reading at the simulation because we need to look a lot of examples. The market came later on, tapped. Nope, it came here later on, tapped into the entry. As you can see, this is where the entry was taken, and the market went down almost how many pips? I remember it was almost 100 and something. Yeah, it was 150, 160 pips. So you would have taken your entries based on that criteria. But speaking of the bigger picture, if we come to the monthly time frame, actually we're still in a bearish area of liquidity. So selling this pair is a very, very good idea. Coming to the daily also, we didn't have any clear price action. As you can see here, the market didn't take out this low because this was the previous high. The market didn't perform any of the shifts on this area because the shift was supposed to happen on this area, but the market tried to reject it. So we would have traded this based on the fifth agglomeration, maybe, if the market maybe provided some sort of criterias, but so far that was the entry that was taken based on the AUDJPY pair. I mean the USDCHF. But also speaking of this, the most anticipated pair of each and every one, the gold. Speaking of the weekly time frame, remember on the previous recap, after I took an entry on this area, we waited for the market to come to hit our TP on this area, which the market actually did. But also, we took another entry based on the fundamentals. I always tell a lot of people I don't trade these fundamentals because a lot of fundamentals actually follow the market structure, criteria, and rules. So speaking of rules, we had a shift on this area. I don't know why this broker maybe tried to, I don't know, this saver tried to hide maybe but we had a clear inside formation on this area of liquidity right here. We had a clear, if you open your MT4s, you're going to observe clearly that we are having an area of liquidity on this area. So before taking your entries, it's better for you to confirm those areas of liquidity from different or various savers before taking any action. So I remember before the fundamental release, we had this particular shift on this area right here, and also you had this formation. So speaking of 15 minutes time frame as the area where we're going to take your entries, clearly individual would have taken entry based on this area because we know our rules based on the system. But maybe to be fair enough, coming maybe to the 5, you would have taken your entry based on this liquidity engineering because the risk was almost 8 pips. But we took an entry on this liquidity inducements, which were actually happening on this area. So the market came, tap into that area, and the market went very, very fast, 284 pips. So I usually don't trade fundamentals. I just follow market structure principles. So that was the fundamental that was actually taken. A lot of people, I needed to address this because a lot of people came into me and tell me, bro, how do you trade the news? So I usually don't trade the news. I just follow market structures principles. But also clearly maybe explaining the entry that was taken recently, we are currently holding. If you observe clearly on the weekly time frame, the market, because clearly on the monthly, we didn't actually close above this area, but we are not in the position to say that because clearly we didn't, this month is actually, the market didn't close on this month because it's actually 18th March right now. So we have to wait for the market to come to close above this area. But going to the weekly time frame as one of our constant time frames also, the market performed a closure clearly, as you can see here. This was the closure that the market performed. So as long as the market closed above the swing points, and also clearly we may have some sort of liquidities on this area. A lot of people may actually don't understand how we support these liquidities on these circumstances, but a lot of students know why we have to put this as our area of liquidity. So coming to the 4 hours time frame now to observe if we're having any shifts. let me clear this drawing right here, this point drawing, so that you can actually see clearly each and everything. Okay, but before that, if you observe clearly here, at the moment we didn't have any, because the shift point was supposed to be on this area right here. This was the shift point from the 4 hours time frame. It was supposed to be on this area right here. But as I told you back in the previous videos, also a shift point is also an area of liquidity. As you can see here, we are having a validation point, and also we are having an invalidation point. So also a shift point is also an area of liquidity. That means for us to come to liquidate the 4 hours area of liquidity, or for us to come to perform a shift on the 4 hours, for us to come and close below the invalidation point from the 4 hours, we needed to have a shift on 30 minutes time frame above this area. So coming to the 30 now, the shift point from the 30 was located on this area as long as the highest point was above that previous particular area of liquidity. So this was my shift point from the 30, because usually the shift point from 30 actually happens before the shift from the 4 hours time frame. So if you observe clearly here, we are having this as a area of liquidity, but I would have to mark this as my invalidation points. I won't explain the reasons why, but a lot of people actually understand why we would have marked on those areas. And clearly, if we come maybe to the lower time frames, maybe 5, to observe clearly, we are having this as our liquidity engineering. Clearly, we are having this as a liquidity engineering, which you would have taken it, or maybe the liquidity inducement type sheet, you would have taken it also. But I personally came to 3 minutes time frame, and I observed what we call as the banker block. I don't know if a lot of you guys understand this concept, but I took the banker block. This banker block happens few times. So when you spot one of them, not each and everywhere, when you spot it clearly on a specific area where you're, maybe the area of interest, you're going to take the entry as usual. So the entry I took was based on that banker block, and the market later on came. And as you can see, the entry was activated. And clearly, this entry, I always use 15 pips, as you can see, because I know maybe if the market stops me out by 15 pips, then I'm completely wrong at that specific trend. So now this entry is the one that is supposed to go and perform a shift on the 4 hours time frame. So observe clearly, we are having a closure on this area, but this is not a shift. A shift is supposed to be of a candle closure on the 4 hours time frame. So coming into it, playing the price, market came down, and the market performed a shift now officially at the moment. The last 4 hours, the market performed a shift on the 4 hours time frame. So currently we are running almost how many pips? 334 currently. I actually posted this entry a while ago. And as long as we're having a clear shift at the moment now, we have to expect some sort of pullbacks coming to this inside formation right here. That means we'll have also come to look at the 30, because we're having a deviator on this area right here. So we expect movements to come to this, to liquidate this formation on the 30. That means we also have to have a shift on 30 minutes time frame if it will happen, because that is just an encounter trend. But clearly, that is all about gold. So we just have to wait for the market to do its thing, because we usually trade what we see. We don't trade what we believe. So that is gold. Coming to maybe the AUDJPY, we had a movement from the 4 hours time frame. I remember it was a shift, which was located on this area. And the formation that was used was this one. Guys, better for you to know how to mark these shifts correctly, because each and every trade that you take is going to start with a shift on how do you spot that shift point. And observing the bigger picture, maybe the monthly, as you can see clearly, the market tried to liquidate this monthly rate of liquidity that we're currently having right now, but the market for now didn't manage to come and close above those areas. And also on this point right here, our invalidation point was supposed to be on this point right here. And also coming to the daily before going to the 4 hours, clearly we didn't have a clear price action on this area, but luckily we had a shift back in the days, but the market came and tried to liquidate this formation that was actually left on this area in terms of transitions. But because it was some of the, maybe usually a lot of Australian pairs are very, very tricky, are very, very stubborn, and they are having some sort of ways that they actually behave. So it's better for you to go and back test so that you can actually see or actually know how to deal with these behaviors that are actually happening based on these pairs. But we had a shift on this area and we had this formation, and clearly this entry was taken based on the liquidity engineering from the 30 minutes time frame, which it was also a liquidity inducement. This was the liquidity, this was the liquidity inducement. If you observe clearly on this, when I tried to extend this line on this previous years, you can see we are having some sort of a lot of reactions. So basically this was the perfect, this was the perfect entry for us to take clearly. And from here, if we are, as you can see, we're having only 2 pips, but it's better for you to extend it maybe to 3 because you know some sort of spreads and slippages and other stuff. So it's better for you to put it that way. So observing it clearly, the market later on came and triggered the entry because we had to have a continuation of movements so that we can actually take the price up so as it can go and create more highs. And as you can see here was the entry. It was a very, very perfect entry, as you can see here, almost like a zero drawdown entry. So the market went up, performed another shift, left also another area of liquidity on this area. The currently movement that's actually happening at the moment. If you go to the 30 also, there's nothing here, as you can see clearly. Maybe we can go to the 5 minutes time frame to observe. Actually, I didn't take this trade personally, but I came to find it out that later on the market has already went far, so I didn't have choice. But you would have taken based maybe on the liquidity flips, maybe happening down to this area, or the liquidity engineering or whatever. Yeah, because we're having some sort of candle right here, the banker. So would have taken maybe on this liquidity flip. Some brokers would have activated the entry. Some brokers maybe they would have skipped it based on some sort of liquidity. The slippages or the spreads, but the risk was almost 3.3 pips. So considering the banker block, would have taken those entries. If you don't know about the banker block, maybe go to the previous videos that I tried to discuss on the banker blocks previously. Would have actually know how to deal with them. Also, we were having this CHFJPY pair, and clearly we were having this area of liquidity on the monthly time frame. The market didn't close above the swing point, or it performed as you can see here. So we would have taken also the selling entries based on the daily time frame in terms of shifts performing maybe on above those areas. But the entry that was taken, considering the first agglomeration, I won't disclose the first agglomeration in this area, but considering the shift from the daily time frame, or also considering the HPS, I want to also disclose it clearly. In general basis, we are having a shift on this area, and also we are having a daily inside formation, which was this one. We took also the entry on this point right here in terms of the fourth agglomeration, but I just need to explain some sort of liquidation process on this area. As long as we have already performed some sort of liquidation process on the daily time frame, Just as long as we're also having a 1 hour shift already, we would have also maybe used the 4 hours time frame to take our entries, because clearly each and every liquidation process has already been done. So coming to the 4 hours time frame, the entry that I actually posted this morning, we're having a shift on this area, and also we were having an inside formation, which is this one. So this entry is very tricky. Coming to the 30 minutes time frame to observe if you are having any of the liquidity engineerings. Actually, we didn't have any. Coming to the 5, we're having a clear liquidity engineering, which is this one. But if you observe clearly, I told you before, and also continue to tell you, if you are having a liquidity flip, the liquidity engineering, go for the liquidity flip, which is this one, always. So the market came, tapped into that entry, and now the market is continuing to go up. So we are currently running, as you can see on this liquidity flip right here, stop loss was supposed to be maybe on these areas, but clearly if you measure, we're having 1.6 pip. This is not, it's not good. It's better for us to maybe extend it even maybe 2 pips or 3 pips, because we're having some sort of slippages, the spreads, and as you know, so it's better for you to extend it. And as you can see here, the market, you can maybe you will have used maybe 4 pips as our stop loss, and the market is currently running to almost maximum of 165 pips. So we expect this entry, because it's observed clearly on the monthly, the market has to come and create a new high on this point. But we also have to be very careful, because on daily basis, we didn't perform any of the shifts, but we took the entry on 4 hours because the liquidation process on the previous area of liquidity has already been done. So we'll have to wait for a shift on this area right here. So if the market fails, or maybe the market performs the second agglomeration on this area of liquidity, we would have no choice but to sell this pair again for us to go maybe further to this portion that's actually left on the monthly area of liquidity. So that was all about the CHFJPY pair. Sorry, I had a phone call. So the last example we are having on this area now, it's the silver. A lot of people didn't understand how this entry right here was taken. But clearly, if you observe the momentum activity on this area, you have to find those areas where the market didn't maybe tap at the exact point. So comparing to the previous areas that the market didn't tap, and also comparing to the imbalance concepts, you had to mark the imbalance on this area because of the relationship between the first candle and the third candle. But we'll have to extend this zone until on this point because of this price action that was actually happening on this area. So we have now to go down. Here we don't follow the time frame coordination. You just have to go down until you observe a zone where it doesn't matter on what time frame, but you just go and observe the zone. On 30, as you can see, we didn't have any. Also on 1 hour, as you can see, we didn't have any. So coming to the 30, we have nothing. Coming to the 15, we also have nothing on these areas. Coming to the 5, we had 2, as you can see. So now your entry is going to be on one of these 2 zones. So we'd have marked maybe this one, for example. And also we would have marked this one. We have 2 ways of refining these areas. One, we may use maybe the liquidity pools That means we would have come to mark our entry on this particular area right here. And our stop loss is going to be how many pips? As you can see here, this silver, the gold, also the USDT, they actually vary on each and every broker. As you can see here, we are having 181 points. Some brokers may use that as 18 pips, but others are going to use that as 1.8 pips. So it varies on different brokers. But also going further, to refine this entry more further, if you go to the maybe 3 to observe any of this, nothing. Going to the 1, we don't have any of the liquidity engineerings. So you would have marked, or you would have used maybe this one right here, this particular liquidity engineering, as you can see here. Would have used that, or would have used maybe the liquidity pools concept. But clearly the market later on came, it didn't reach to this area. So you would have actually delete your orders after the market activated the entry, because the entry was activated on the first zone, as you can see, those areas. So playing this price, market came, as you can see, taps into entries, and the market went up just like that. So you would have taken your entry based on that criteria, the imbalance criteria. So you just have to go and maybe practice this. And so far the market went almost how many pips? Almost 697 pips according to various brokers, but also 69 pips according to different brokers also. So just a matter of knowing how the pip value works on each and maybe on each and every broker that you're actually using. So that's all about the previous and the currently that's actually going on. So I guess I'll see you on the next video. Focus signing out.